What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome to the Advisor's What's Making Headlines podcast for the week of 20 to 26 March. I'm your host, Charlie Tchetchenian, senior journalist on The Advisor. I'm joined by my colleague, Ben Squires, featured content writer on The Advisor. No Annie, obviously this week. She's in Perth for the Better Business Summit and Awards, which is powering on. But how are you? How was your week?
Yeah, I've been really good. It's a lot of big stories this week, and you've done a great job sort of holding the fort down, covering all these stories and writing them all up.
Thank you,
But
mate. Thank
it's
you.
also good for the podcast too, because when we actually have headlines to
100%,
to
yeah.
cover,
It puts the headlines out to the forefront, which is nice. We've got headlines well and truly for all our listeners this week.
yeah. So the Better Business Summit has sort of been ongoing as well. So they were in Perth yesterday,
Yep.
and then we'll take a little break for Easter, and
Mhm.
then Melbourne and
Sydney.
Sydney after that.
Yeah,
So.
back on the East Coast. Thankfully for Annie's sake.
Yes, yeah, 100%.
Running around
yeah.
consecutively back to back around the country, being in Perth is no small task whatsoever. There's a time delay and whatnot, but I think we've handled it pretty well. Like you said, a lot of reporting from myself, yourself and Julian as well in the
Yeah.
past couple of weeks, which has been really good. But let's get stuck right into it. We've got, first and foremost, some updates from the Reserve Bank.
Yeah.
And this is after they've hiked the interest rate, cash rate consecutively in February and March, 0.25%. They've released their March financial stability review, basically a health check, how they think borrowers, businesses, banks, non-banks are faring.
Yep.
If anyone is under kind of significant pressure or not. And it's a pretty comprehensive kind of data set that they look at here to review these findings. So I'll start with borrowers. This was a story that was up at the start of this week. Felt a lot longer than that. But,
Yes, yeah.
and they've basically used this review to say that households and businesses are generally pretty well placed to cope with these higher interest payments, which is refreshing and good to hear when you're hearing all of these mortgage stress kind of polls and surveys that are coming out and whatnot. The Reserve Bank has said, quote, households and businesses are generally well placed to weather high interest payments and cost pressures. The strong financial position of most borrowers means that the household and business sectors are unlikely to be a source of systemic instability. So they've basically kind of cited a couple of things here. They've gone, arrears broadly are really low. I've seen that when I was doing, the reporting season that we just had, whether it be half or full yearly results from non-banks and banks, arrears were low across the board.
Yep.
They'd all dipped, and people were generally ahead of their mortgage repayments too. Quite a significant chunk, whether it be 2.5 years ahead of their payments. That's what the RBA's kind of used to justify this. But they've also acknowledged that some borrowers are still remaining under budget pressure, which is honestly fair enough. They've said the share of mortgages in severe financial stress where mortgage repayments and spending on essential exceed their income has declined and since mid-2024 and is small. But again, they've acknowledged that, these cost pressures are pretty blunt and are going to hit people quite hard too. So, sure, a lot of it's data driven, but there's a human element to that as well. And the RBA's got to be conscious of that too.
Yeah, and it provides a bit of a glimpse into their mindset and their thinking with recent decisions as well, how they're seeing the market.
Absolutely.
One of the things in your report that they did note, and they've talked about this before, but while sort of they think overall lending standards are still sort of sound, they are watching sort of certain pockets in the market, things they've talked about such as investor lending, high debt to income loans, first home buyers with small deposits, alongside sort of the business sector, which is facing insolvency pressure. So this is stuff we've written about before, but yes, certainly something the RBA has an eye on.
Yeah, absolutely. And they've also, like you said, used the report. It's pretty comprehensive. They speak about borrowers and businesses and insolvency pressures as well, but they also do it as a bit of um, a kind of like, health check on the banks and
Yeah.
the lenders
Yeah.
as well. And they've basically said that the banks are pretty ready to withstand any incoming shocks.
Yeah.
Where there's a lot of discussion at the moment about um, fuel levies that are going to be passed on in multiple sectors of the economy,
Yeah.
and the pressures that's going to have on growth. And I know Governor Bullock was talking about the potential risk of a recession. She didn't want to get caught up in that whatsoever, but she didn't. She kind of said, "Look, anything is possible,"
Yeah.
and the RBA is ready for that. But they've used this report as well to state that the central bank believes the overall financial system is robust enough to keep supporting households and businesses across a range of economic outcomes. They've also kind of had some, non-bank expansion. I know we talk about this a lot
Yep.
here on the Advisor and Broker Daily is under the microscope from the central bank as well. It's kind of observed that these lenders, are becoming increasingly important competitors. You know, they still represent a pretty modest, relatively small slice of the total credit pool compared to the majors. Um, However, they've kind of said that this growth has expanded funding options for both household and businesses, particularly in niches where banks are less active. But they've also made clear that it was watching kind of underwriting practices closely. And it said drawing on liaison with market participants to gauge how far these standards are being stressed. They always do this. Stretch. They always do this
Yeah.
as well. However, I don't think anything particularly sticks out here. There's no red flags. The RBA didn't kind of flag any risky
Yeah, they were sort of saying
activity.
risks are constrained, but they've got an eye out for looser lending standards, particularly as competition between the lenders of all sort of shapes and sizes heats up.
Yeah.
And yeah, that's just something they've got an eye on.
100%. So let's move on in tandem with that kind of stability review that we had from the RBA. It's good to match that with how consumers and borrowers are actually feeling. And I wrote a story earlier in the week on how kind of borrowers' financial priorities are shifting, how they're pivoting their cash flow, their savings as these incremental cash rate hikes creep in. And it's not a significant shift, but it's a shift nonetheless. What's happening? What are borrowers doing to kind of deal and cope with these rising rate pressures?
Yeah, so I believe this story was taken from some research we received from Agile Market Intelligence,
Yep.
the March 2026 Consumer Pulse. And it's a
Mhm.
bit of a snapshot on consumer priorities and spending and that kind of thing in light of all the sort of pressures that they're undergoing at the moment.
Yep.
So basically, what the research shows us is that mortgage holders are kind of abandoning this savings first mindset
Yep.
in favor of recovering, making sure their mortgage is paid,
Exactly.
which is
Which is no surprise.
no, unsurprising.
No.
Fair enough.
Yeah.
But
But
yeah,
still a shift from the current base.
yeah,
I guess when you look at the numbers, it was a 10-point jump month on month from February to March, 10-point jump in mortgage holders nominating debt repayment as their primary financial repayment.
yeah.
So
So for 72% of mortgage holders are now prioritizing paying their loans above anything else.
Yeah.
While savings have sort of dropped to 19%, which is the lowest level this year.
Mm.
And yeah, only 44% of all whole households are now prioritizing saving, with many sort of forced to choose between repayments, daily expenses, or
Yep.
building buffers, rather than sort of giving a balance. So I guess it's that push and pull as the household spend increases, all these pressures add up, and yeah, they kind of have to find the balance somewhere.
Yeah, I think it's also important to note that like there's a lot of categories here as well. I think debt-free households, like even debt-free households, sure they're prioritizing savings a lot more than those that carry mortgages. However,
Yeah.
they've even seen a dip
Yep.
in kind of the amount that they're prioritizing savings. These are people that are primarily unencumbered by any, or they might have existing personal loans or what have you, but they don't have mortgages hanging over their head, and even those, that cohort is saving less. They're prioritizing it to other things, whether it be utilities or bills. So it just shows how much people have to juggle at the moment.
Yeah, no one's immune. Everyone's
no, exactly. And Agile kind of stressed that they only expect these numbers to rise.
Yeah.
And it is a shift because you saw people pretty quickly, even after the cash rate went through that easing cycle last year, build up their buffers.
Yeah.
So it's going to be interesting to see where this goes from here. Keeping on that tandem of the cash rate and the RBA's thinking moving forward, we had some inflation CPI updates this week from the ABS.
Yeah.
These are always, you never know what you're getting. They're much like cash rate decisions, really, but you can, at least with a cash rate decision, you have a chance of getting it right. It could be anything, and we were getting some pretty hawkish comments from the major banks.
What was this period? This was the read for February?
February, yeah, 12 months. Yeah, this was 12 months to February. Obviously, CPI held steady at headline inflation at 3.8 in the 12 months to Jan 26. Inflation in the 12 months to February 26 rose to 3.7. So it dipped 0.1%, easing slightly, as I said, from 3.8. And the kind of chief contributors to this were housing, housing inflation, which was up 7.2%. A lot of the, I'm going to write a story about that today. Funny enough, the property councils, HIA, they've got a lot to say about that.
Yeah.
People are more or less quaking in their boots.
Yeah.
But we can get to that later.
Yeah.
And you've got food and alcohol, beverage, and recreation and culture. People that go on to too many concerts. I can't blame them. I'm going to a couple, funny enough, soon. But trimmed mean inflation, which is the RBA's preferred gauge, held steady at 3.3. That's unchanged, but it's still above their 2.3% preferred target band.
Yeah.
But the interesting thing here is hearing what banks and economists had to say about it, because you're looking at those numbers. You think, well, inflation has broadly eased, and we kind of saw that with unemployment as well. It was hard to read.
Yep.
It went up, but then seasonally it went down as well. It was a bit like that with these figures. So all the banks are basically impressed that, we hate to break it to you, but this is what inflation, they kind of believe that inflation would have tracked on a downward trend if not the war kind of begun in the Middle East. They basically went, well, don't pay too much attention to these statistics. It's not factoring in any of the oil shock or any of the price pressures from petrol and oil that we've seen. Prices for diesel and just general petrol are way up, and multiple industries are baking that now into supply chains and their operations with levies. So ANZ has basically said that the fuel shock will feed through the economy come the quarterly inflation numbers and onwards and moving forward. They've all revised their predictions for CPI for the quarter up marginally. And she's, Adelaide. Is it Adelaide Timbrell? Yes, Adelaide Timbrell. She's a very young economist at ANZ, but she was hot off the press on these numbers, warning that the impact of recent fuel price increases were likely to spread more broadly through the economy as the year progressed. They basically said on the headline measure, it revised its expectations for the March quarter up to 1.4% for the quarter from its previous expectation of 1.2%. And they're still factoring a 25 basis point hike in May.
Yeah.
They all are. Spoiler alert.
Yes.
And NAB and CBA as well are continuing to back a May hike. Taylor Nugent, senior economist at NAB, basically said, the latest CPI numbers with the recent uptick in unemployment slightly reduced the RBA's concern about capacity pressures,
Yeah.
but that it was not enough to lower the prospect of further hikes. And I think this is a big one. This was a big one for me.
Yep.
This is a quote from Taylor Nugent, who said, looking forward, headline inflation will jump to around 4.5% in March. That's a near 1% monthly rise.
Yes. Yeah. So March is a big one. Everyone's going to be
Yeah.
interested to
And we
read.
knew it. We knew it was going to be, just because the banks really couldn't say more consistent, more frequently that
Yeah.
the quarterly CPI print will seal the deal.
Yeah.
And I think I want to go into Westpac as well, because Westpac didn't have a lot to say about rate implications. They've basically sealed that off as a foregone conclusion. Didn't think it was worth talking about,
Yeah.
but they've unpacked inflation as well, and they think, quote, headline inflation will be around 5.5% on a monthly basis. This is headline,
Yep.
by mid-year, with the bank attributing the majority of that rise to obviously high petrol prices, and that core inflation would show a modest lift around 3.5% over the same period. So that is high. We've had Treasurer Jim Chalmers also floating Treasury costings and projections, maybe preparing the kind of populace for what's to come.
Yeah.
But yeah, it's not showing any signs of slowing. And I think it's just a shame for Australia that we already had kind of an inflationary surge before this conflict, because a lot of other nations were coming from a much lower base. Inflation wasn't above 3%, as was here when this conflict began. So
Just have to watch this space.
yes, exactly. And thanks for that. I know that was a long one. I said I'd keep it short and did the exact opposite. And I'm not going to assert myself on this one, but I did write up this story, and we've had a little update on investor lending as well from Westpac and PropTrack. What
So this
they
was a
said,
really
Ben?
interesting story. So what PropTrack and Westpac have put together an investor report, and it shows that since 2023, the number of new investor loans has risen by 64%. So it's lifting investors' share of the total housing market to its highest level recorded since 2017. It's really interesting. They sort of attributed this to strong rental demand, high yields, which is sort of pulling investors back in, with many sort of targeting sub 700K properties and increasingly looking at opportunities interstate to sort of buy and get better value.
Yeah, that was very interesting.
Which is interesting as well. While most investor sales are profitable and confidence has sort of returned, the report showed, banks like Westpac also expect price growth to slow in 2026 as interest rates sort of rise. So it'll be interesting to see how that impacts investor activity, whether there will still be pockets of opportunity out there, whether investors will have to be more strategic.
I think so.
But yeah, it's just got to show over the last few years, investors have gone gangbusters.
Yeah. And yeah, it was interesting to see from the banks as well that they believe kind of property prices and investor activity will moderate.
Yes.
But they don't believe it'll stall.
No, I don't think so.
They've kind of just said in certain pockets as well. We're seeing it in Sydney and Melbourne. But the opposite's happening in Brisbane and Perth and Adelaide. So, that's kind of a comprehensive update on everything we're seeing from the central bank, the major banks, and the kind of housing market as well. We'll be right back for a brief summary on what's happening in the acquisition and merger space. A couple of big proposals have fallen through. We'll be right back. Hello, thanks for sticking with us. Now, this week, we've had a couple of kind of updates on what's happening in the acquisition front. As well. I know Annie wrote a story earlier in the week. It was my birthday earlier in the week, so I got the day off. And on that day, it just so happened that Recludo picked up Pink Finance and is further eyeing IPO as well. What happened there?
Yeah, so I'm sure our listeners will know, but Recludo, as part of Recludo Group, a sort of private equity firm that specializes in the broking industry,
Yep.
and looks for sort of investment opportunities throughout it, has
Mm.
taken a controlling stake in Pink Finance.
Mm.
So it's taken a 51% stake in the business. And this is sort of part of its strategy we've seen over the last few years of sort of acquiring and scaling brokerages through a roll up sort of model,
Mm.
um, based by capital and expertise. And what Recludo does is they basically sort of support these broker owners
Yep.
with M&A capability, recruitment, operational systems,
Yep.
while still giving them that brand identity and
Mm.
day-to-day control,
Mm.
so they can sort of grow their loan books, reduce their key person risk,
Mm.
but also expand.
Mm.
Yeah, I think the report says they've built a $3.2 billion residential loan book
Yeah. Wow.
through a composition through a combina- com- through a combination. Sorry, I
Mm.
forgot how to talk for 2 seconds. Through a combination of acquisitions and partnerships
Yep.
of established brokerages. They've
Yep.
taken controlling stakes in PBI Mortgages, Vision Finance Australia, Australia Finance 360, AM Broker, Astar Finance, Fry Group.
Yeah. Wow.
Um,
Yeah, eight.
8,
Eight
yes.
companies acquired. That's so far
Yes, that's so far.
by Recludo. Gosh.
This is part of a big theme we've seen in like recent years of sort of, I mean, AFG is making similar moves with its
Yep.
brokerage acquisition program.
Yep.
And it's this theme of consolidation, expansion, how do brokerages leverage different models to get ahead and
Mm.
that kind of thing.
Mm.
The other thing we're flagging in the report
Mm.
is Recludo's IPO ambitions.
Mm.
So Recludo has plans to build a portfolio of approximately 50 brokerages
Mm.
ahead of a potential IPO.
Wow.
So yeah, it's just definitely we'll be reporting on these developments as they happen. But yeah, definitely something to watch in the coming months.
Yes, absolutely. And undoubtedly there'll be more updates on this as you said. And
Yeah.
if you there's a lot more to the article. So if you want to read the full thing, go to the advisor website
Yeah.
and check it out. And see the kind of detailed structure of everything and the appointments and whatnot
Yeah.
as well. And now there was also Pepper Money announced earlier midweek. It was on Wednesday that it had pulled the plug on takeover talks with Challenger, and this is something that's been unfolding for a couple of months.
Yeah.
It was first confirmed in early February, but yeah, Pepper Money, the non-bank lender that's listed on the ASX, many brokers out there will be obviously familiar with and work with,
Yeah.
had confirmed on Wednesday to the ASX that he'd had ended and ceased negotiations with investment manager Challenger
Yeah.
and Pepper Group ANZ Holdco Limited over a kind of joint proposed acquisition proposal, deciding instead to back its own growth trajectory and stress its kind of independence.
And part of that is well, we've been reporting on this. Challenger sort of put in the initial offer at $2.6
Yes.
a
Yeah.
share.
So it was basically kind of, it caps a 6-week process. Wherein Challenger, one of Australia's like largest providers of annuities, made an initial non-binding proposal with Pepper Group ANZ, and it kind of envisaged implementing a scheme of arrangement in which Challenger would hold 25% of Pepper's Money's issued capital.
Yeah.
So under that proposal, Pepper Money shareholders, other than Pepper Group, obviously, were offered $2.60 per share. And Pepper, in response, set up an independent board committee and granted Challenger a period of exclusivity. However, Challenger returned to the market on 17 March, obviously after this conflict had begun, and basically revised its proposal pretty considerably, lowered the headline price that was initially floated from 260 to 225 per share, and it said at the time that was its quote best and final offer. So now we are where we are this week, where Pepper has said, the IBC has weighed the proposal, it's consulted with shareholders, and ultimately it's found that the proposal could not be taken to a binding deal. It said, quote, the IBC has, quote, determined that the revised proposal is not reasonably capable of execution. And Challenger also confirmed the rejection to its shareholders on the ASX, and said it'd been advised by Pepper that it had walked away. And Challenger's MD, Managing Director and CEO Nick Hamilton thanked Pepper for its cooperation and said the two businesses would intend to maintain their existing commercial ties. And Pepper made a reference in their statement that, loan originations and applications, even in the first, couple of months of 2026 had exceeded that seen in late 2025. So they seem pretty confident here. And again, there's always speculation about what's driving these things and whatnot, but we don't have those facts. It's all just scuttlebutt. But interesting to see. There was kind of a lot of hype about this. I interviewed Murray Raham back when Pepper I think released their half-yearly results, and he was pretty tight-lipped about this. He didn't want to say anything, which is unusual. They at least kind of dropped something, but he was hesitant to mention anything. Obviously didn't take that as an indication of Pepper's thinking. But sometimes these things happen. They fall through, and that revised offer.
It's pretty market sensitive as well. So
100%. So that's it. Just a little kind of brief update on the acquisition front. We'll be right back with some broker updates, seeing what brokers are doing with AI, how they feel about it, how they're implementing it, and I've also interviewed a mortgage fraud specialist. He's got some tips for all you brokers out there on how to deal with this rising scourge. And we're going to give a cap to the Better Business Summit Awards as well. Stick with us. We'll be right back. Hello. Welcome back. We've had some kind of major updates, surveys, and whatnot in the past couple of months on AI from brokerages and aggregators out there. This week, we've had a pretty comprehensive one from Connective. Aggregator Connective. They've put together, they've surveyed their broker network just to get a pulse on how brokers feel about artificial intelligence, how and if they're using it, to what extent, how frequently, and whatnot. Really interesting, and good to get these details and insights. So what was found?
So I think the report is called AI Readiness in Australian Broking. And they pulled the survey from 300 Australian brokers across mortgage, commercial, and asset finance. And the sentiment was pretty much positive. I think 50% of the brokers surveyed said they believed AI will be essential for staying competitive over the next couple of years, while 36% said they believe it will improve efficiency in their businesses.
That's 86% favorability.
So 86% are sort of thinking AI is going to be a bit of a boon for them in their businesses. Despite this, though, one of the really interesting things that came out of the survey is around 65% of brokers have no clear AI strategy, and many sort of lack a governance framework at the moment, or a embedded workflows. And this is a little bit of a problem. I think a lot of industries would be facing this at the moment because it leaves potential risks around privacy, compliance, potential bias risks, and that kind of thing. We saw throughout the report, industry leaders have sort of warned that successful use of AI requires like these clear policies, compliance focus, and sort of training and sort of thinking about how you're going to implement it in your business and thinking about what the guardrails are and that kind of thing, particularly as, we're seeing ASIC scrutiny on things like how best interest due to your bid is implemented in a business and that kind of thing.
That's coming under increasing focus. They want those bid files polished,
Yes. Yeah.
as well, and it's hard with AI as well. A lot of it's out of your control, and there might be kind of um, gaps out there that brokers aren't aware of,
Yeah.
even as well.
Yeah. The report also said that only 37% of brokers are currently using AI regularly and confidently.
Okay,
So there definitely is some room to move. But I think, yeah, the big headline is if you are going to use it in your business, sort of have a think about how you're going to use it.
and
And
what did Connective kind of say, or like what were Connective's recommendations as to how they believed that brokers could improve this, or go about this, or develop a bit of a kind of
yeah,
structure
well,
there.
Connective were big on sort of making sure you had a clear strategy,
Uh-huh.
making sure the right systems and infrastructure are in place,
Yep.
setting governance frameworks and a culture that prioritizes experimentation.
Mm,
So, sort of thinking out about how you can advance it, but most importantly, safe use.
mm.
And when you can get these foundations in place, AI can be a genuinely useful and sustainable tool. And it's really going to be sort of enhancing a broker's, well, it could potentially be something that enhances a broker's work and streamlines those processes and tasks that are part of a broker's day,
Yeah.
so they can sort of focus on the client and relationship side of things.
And demand is only increasing as well. It's heating up, and broker share in the market is just continuing to
Yeah.
rise. Applications are continuing to rise. So yes, it's a big kind of productivity
Hmm.
point as well, if brokers can use it to leverage their skills and
Yeah.
output. But yes, a good piece of work from Connective. Again, go up and read the article.
Yeah.
There's always more to it. But a little bit from me as well. I had an interview this week with Corey Smith, who is a 20-year specialist in credit and fraud prevention. He's a senior partner at FICO, which is basically a data analytics company that specializes in
Yeah.
borrower health, and also credit reporting and fraud prevention, and all of these things. They work closely with a lot of the major banks and lenders on fraud prevention
Hmm.
as well, and data analytics. So he's definitely at the center of all of these trends. This kind of mounting issue that we're seeing on, mortgage fraud, um, hitting the major banks. We saw it last year. We're seeing it again this year,
Yeah.
chiefly at CBA. Doctored income statements through the introducers channels. And he's basically saying that, mortgage fraud now is, from what they can see, deeply intertwined with anti-money laundering risks,
Yep.
which is
Yep.
which is kind of the, or encompassing um, what's occurring at CBA. And he's kind of stressed that it's on the forefront of the major banks' minds, and that, technology now has revolutionized the game, and that these same tools to automate workflows for lenders is also now readily available to fraudsters
Hmm.
to con them.
Yes. Yeah.
And he's saying it's become easier for them and harder for brokers and harder for lenders to pinpoint these, AI generated income statements, and what have you. And he's basically said, um, that most, despite alleged misconduct from the broker channel, brokers are critical here. They are the gatekeepers that can stop a bad loan from reaching
Yeah.
credit teams. And he's said that these AI fabricated payslips and bank statements demand a deeper level inquiry from brokers. He said they need to probe client conversation and document checks, make sure, he said, to dive deeply into their background, their employment, their income, their financial situation, see if there's any discrepancies, anything that doesn't smell quite right. And he's basically said that, certain documents warrant further scrutiny given their kind of history in fraud cases. He said specifically to look at payslips and tax returns and bank statements. These are commonly falsified documents. And he also said there's certain behavioral traits from brokers, but also, even other third parties
Hmm.
that are approaching brokers, whether they be property investors or developers or other brokers that are wanting to, really push and fast forward the mortgage process. He said that's something that brokers should definitely keep an eye out for. He said, quote, on the borrower kind of behavioral trait, he said, a straw buyer profile is a borrower that is almost disengaged
Yep.
to the process. They don't seem to care about the interest rate. They don't seem to care about the repayments.
Yep.
And brokers are very astute people. A lot of it is kind of emotional intelligence as
Yep.
well.
Yep.
I asked him a little bit about open banking. I've been talking a lot about this recently. We had that next gen report, and they
Yep.
were saying, well, look, it's something that can reduce and mitigate these fraud risks. He said it's not a silver bullet.
Yes.
Basically,
Yep.
it's a good tool, but it should be used in tandem with other things. He said the kind of market needs to move beyond digitizing these manual checks and build access, he said, to single sources of truth. So income and tax data that could be queried from the first point of application. He's gone, the wider industry should be telling the ATO basically to have direct APIs as a single source of truth. Income can be verified by lenders, go to the source of truth and actually find out. And I know I'm speaking for a while here, but he's also got kind of recommendations for the lenders and the banks
Yep.
as well. He said basically the banks need to view fraud across the entire customer and referrer network. So he said these fraud syndicates tend to leave patterns.
Yep.
Common brokers, accountants, solicitors, IP addresses, device IDs, deposit sources, you name it. And he said these kind of sources can then be used to map can be mapped by using existing analytic tools that you can then run through your back book. And he said by running these through portfolios and new flows, lenders would be able to see when a fresh application linked to a previously identified network. He's urging lenders to invest in, quote, really sophisticated document verification capability that could plug into a range of third-party data sources from superannuation, PAYG checks, through to specialist verification databases. But he kind of ended on the fact that this couldn't be left on the shoulders of banks or brokers exclusively, and that governments and regulators need to play a more active role in mitigating this.
Yeah, I'd encourage our readers, if they haven't checked it out, to have a read, get on
Yes.
the website and check it out.
There's a lot to it.
It's a really interesting interview. It's got a great line, anti-money laundering is the CEO killer,
Yes.
as we've seen a couple of times. But yeah,
100%.
definitely worth checking out if you haven't read it already.
Thank you. Yes, please go do your go read up on that article. There's only so much I can do it justice verbally, but a lot of tangible kind of takeaways from Corey as well on that. And just to provide a wrap on things as we've done for the last couple of weeks consistently, Better Business Summit and Awards have wrapped up at Perth.
Yeah.
It was a really full room. It was packed by the sound of things. People were there and gung ho to see what the speakers were saying. But also we had the awards ceremony last night. Saw that Mark Humphreys was the
MC.
and that's pretty good. That's a good score.
It's a good get.
I like him. He's a great comedian. I'm going to rattle off a couple of the winners.
Yeah.
So we've got Balpreet Ball of Lone Market Ball and Associates was awarded Broker of the Year, and they also walked away with Best Residential Broker earlier in the night. Doubling up there. Congratulations. Worthy winner. Max Miorada of Momentum Wealth was crowned Editor's Choice in recognition of his excellent customer service, serving property investor clients with smiling service. There you go.
Good.
And you had a range of other individual and group winners as well, from a range of kind of small scale to large scale brokerages there.
We've got the full list up on the site.
Yes,
so check them out.
Exactly. as always, offering our sincere congratulations to all the finalists and all the award winners and recipients from last night's ceremony. Congratulations, it's well earned. And also a shout out to our editor, Annie Kane. Better Business will be taking a short break over Easter, the Easter week, next week, and then it'll be back on the 9th of April.
Yes.
How crazy is that?
I don't like to think about it.
No, I don't want to think about it either. But there is still time. We're still March. That's at the Hyatt Regency, Sydney. Although that's sold out from what I hear.
Yeah.
No point. Well, you can always go to the Melbourne one if you're a Sydney broker. Or better yet, if you are in Melbourne, get on your tickets on the 16th of April, Crown Towers, Melbourne. That will be the last installment to the Better Business Summit and Awards of the year. It's kind of flown by.
Yeah, it goes by pretty quickly.
Yeah, well, mostly flown by. But yeah, thank you for joining us. As always, thanks to you, Ben. I know it's always a long one, and it's difficult when there's only two of us as well. So thanks for listening to me waffle.
No, that's okay. Yeah, and thanks for hosting. You did a great job.
Thank you very much. As always, to all the readers and viewers out there, if you've got any tips or story ideas for us, please shoot through your emails, whether it be myself, Annie, Julian on Broker Daily, or Ben here. We're keen to hear about it and keen to write it up as well. Thanks so much for your company and have a great weekend. See ya.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.